Are you ready to overcome the complexities and burdens that come with your success? Join the team at Centura Wealth Advisory in the Live Life Liberated podcast. Now, on to the show.
Okay, and welcome to the Live Life Liberated podcast. My name is Myron, and I'll be your host today. And in studio today, I have a client and friend, Mr. Jimmy Page.
Hey, Derek, thanks for having me.
Thank you, Jimmy, for agreeing to be on the podcast today. And so today's topic is we're going to be talking about ultra high net worth individuals and planning and what kind of sophisticated wealth management team do those individuals need, and those professionals who serve them would be the appropriate audience for today's podcast. So, Jimmy, thank you for being a part of the podcast today. Would you please share a little bit about yourself, your educational background, professional background, and family?
Yeah, I would love to. And many thanks again for having me here today, Derek. So my name is Jimmy Page. I'm originally from Pennsylvania. Did my undergrad college with a marketing degree, bachelor's at Penn State University. I moved out here to San Diego in 2009, right after I graduated, and pretty quickly got into a master's program at San Diego State, where I finished an MBA, also with a concentration in marketing. You know, that led to a number of corporate marketing jobs that I won't get into the details of. And then from there, I went into starting my own digital marketing agency when I was about 26 years old in 2014. Started that really just as my own consulting practice, very small, myself, no employees, really advising clients for the most part, which turned into more of an agency fairly quickly. Full-time job right around that time, and launched into the full agency that I managed for about 9 years until I sold it at the end of 2021. On the family side, I met my current wife in college at Penn State. She moved out here with me. She had a great career, mostly in HR, before giving that up to have our children. I've got 2 sets of twins, so I've got 5-year-olds, Lacey and Mackenzie, and just a year and a half ago now, we had our second set of twins, still babies, Emily and Chloe. So we've got a great family. We've got 2 golden retrievers, and we live here in San Diego still in Rancho Santa Fe, having a great life.
Nice. You've got a very full house there. Five women and you and 2 dogs.
Very full. I mostly spend my time trying to hide in the corner in my bedroom, in my lounge chair. Yeah.
A cute story. Jimmy and I ran into each other, and I hadn't seen his older set of twins, and they were 4 years old going to their yoga class. And they said they've got both arms around the yoga mat. The yoga mat was as big as they were. And super cute kids. Well, thank you for sharing that, Jimmy. You and I got introduced to each other in 2019 and by a mutual individual. And what was the impetus for taking that meeting? Why did you agree to meet with us and begin exploring a relationship?
Yeah. So in 2019, I was starting to have designs on some kind of an exit. I think, in 2016, 17, 18, the way that the M&A environment was for my industry, I was sort of in a mentality that I probably wouldn't get to a spot where I felt like exiting the business and selling it versus just figuring out a way to step out of it a bit myself and let it cash flow for the rest of time. I kind of didn't see a route for M&A. In 2019, the environment had changed a bit, and you're starting to see really strong multiples in my industry, a lot of deal volume, and just happenstance. But I still wasn't really at a place there where I was ready to go to process or thinking in any serious way about selling. I had a really great buyer and a pretty good deal come to me that year. And I didn't have any on the personal side of a potential transaction. I really didn't have anything in place. And so, a friend of mine who connected me to Derek was having that conversation with me, also in the wealth management space. And he definitely perked my ears up on some things that I should be thinking about that I hadn't been thinking about. And in specific, the tax implications of a transaction. And so, I was looking at potentially doing this deal like within the calendar year of 2019. And so I got linked up with Derek that way. And I ended up not doing that deal. It didn't close by the end of the year. But, I had put a lot of things in place because I did start working with Centura at that point, that when I did go to process 2 years later, were extremely valuable for me. And because of the timeline, because I sort of had that bulk in 2019, and we sort of rushed to get a lot of things in place, which isn't really the right way to do it. Fortunately, I had a lot of these things in place on a great timeline for, what ended up happening to me 2 years later in 2021, which was the exit that I had.
Yeah. And Jimmy, your agency grew very quickly. What was the headcount at the end, the top headcount?
Yeah. So we had about, I want to say 70 employees when it transacted, W-2 employees, mostly still here in San Diego, but we had gone remote for COVID and had started really recruiting heavily in other states in the United States. And then we probably had about 30 employees that were full-time equivalent if you added all of the variable staff and labor that we were utilizing in different places throughout the United States as well. So, it did grow quickly. And by the time we exited, we had a pretty significant staff.
Yeah. So congratulations. What a great American success story. Fantastic for you.
Thank you.
Yeah. So we typically tell clients, just like Jimmy said, that we put people in this 3 categories, this gold, silver, and bronze, that 2 years prior to letter of intent is ideal to get this planning in place. And oftentimes we do meet business owners. They're like, hey, I've got an LOI. I haven't signed it yet, but I have one. And what should we do? And that's kind of how, a strategic approach to you, correct? And you weren't thinking about it. You were thinking, yeah, I'm gonna kick it back to a lifestyle business where I'm gonna clip coupons until this deal showed up, correct?
Yeah, that's pretty much the case. I had a plan in place to transition myself out of the business and was already working on that. And, felt like I had a really strong second in command that could take over my role. And I think it does tend to happen that way for a lot of great businesses, unless you're really savvy in the M&A environment or have a planned exit early in the history of the business. I think a lot of times people aren't thinking about selling and it comes their way quickly. And if you're cash flowing 7 figures in your business and you're not using all of that, I think it pays to get some basic knowledge on what do exits look like in your environment, in your industry, and getting some of the things in place that could save you tremendous amounts of money at any point, right? Even if you're thinking like maybe 5 or 10 years down the line, it would make sense for me to sell this. Maybe financially at that point, I could retire and wouldn't even have to let the business continue operating. Really far in the future, it still makes sense to start like investing some in getting the right things in place from a tax standpoint.
Yeah.
I think.
You're spoken like a true professional. It's exactly right. It's getting, because you need time for some of these things to get set up and mature. And in your case, then COVID happened and it put that time in between. But that gold period, the 2 years plus before letter of intent, all planning strategies are available. And then from the date that you sign that letter of intent till the December 31st following the transaction date is the silver period. And then the bronze period is from the January 1st till you sign those corporate tax returns. There's not a lot of things. You're on the podium, but you're looking up and going, gosh, why didn't I start earlier? So you were fortunate that you've got this early offer. We started putting things in place. What was your biggest learning in starting to put this stuff in place? Like what was the big learning around that?
Yeah. One of them, and sort of also just to put more of a point on what you just said, is that like the government really cares that you're not doing these things specifically to avoid taxes for a specific deal. So I didn't know that. I didn't know it at all. There's a lot of intricacy to it, but even at a high level, what I just said, I had never heard before until I started working with Centura and Derek here. So that's what it's all about, right? It's like you want to have really smart planning, both on the estate side and tax side for your business and personal. And you just want to have that structurally in place so that there can't ever be someone pointing fingers at you saying you did this to avoid taxes in a specific way. You want a good process in place and a really good structure. And there's a semi-significant investment to be made in doing that. It's not something that you just fill out some forms and get this stuff in place. It's complicated. And I would say that's a second learning. Like, it's not, I think a lot of people that I know that are really smart entrepreneurs that have businesses that are valued in the nine figures type range still aren't aware of a lot of what's out there and think that they can kind of do this themselves, or that their CPA and lawyer that are in place for the operating side of their business or for their exits are going to take care of those kinds of things. And don't assume that would be a big learning and some advice that I would give. Like, get out there, talk to Derek and company, talk to other people that have really creative tax strategies and a lot of experience with them, and see what's out there, because you can't do this yourself, and you probably don't have the specialized team that can do it in an optimal way for you. And so those are definitely some of the things that, I learned in the process.
That's really good advice. Oftentimes when we're interviewing clients and we get their facts, assumptions, and goals, and we get the short list of the transactions that we should model, the next step in the process is interviewing their professional roster. And something that Jimmy just said is 100% accurate. Sometimes when we interview those folks, most often, the incumbents, whether it be the lawyer or the attorney or the CPA, the incumbents don't have the experience in doing these transactions. So although they have a lot of trust and confidence in what they've been doing for the client, they don't have experience in doing the income tax planning strategies. And so oftentimes that team needs to be augmented to make certain that you have because you need the right M&A counsel, legal, M&A banker, but you need the right CPA group, the right estate planning law firm, plus financial advisor. So there's at least 5 people on the team, if not more.
Yeah. And they all need to be comfortable working together and comfortable on the same kinds of strategies, right? And, we could do a whole podcast on what that means in detail, but it pays to find a team that has worked together on income tax strategies, hopefully many times in the past, and really can show you, like, these are some of the strategies we've put in place and the impact on people like you. Because it's easy to get into a situation where your wealth manager or financial planner and lawyer have a plan, and a CPA is not comfortable with it, and you can't find a CPA that's comfortable with it. In my experience, CPA, I think a lot of people think the CPA is like who's going to put this type of strategy together. And I'm sure there are really good strategic CPA firms out there, but I have never heard of one, to be perfectly honest. And so, you don't want to be thinking that the CPA is going to be driving strategy and that the lawyer and the financial planners are going to be takers of that, right? It really does need to be a multi-pronged approach, and that team has to be very comfortable with each other. And, I think I did well there and very much at the quarterbacking of Derek, but I had learning experiences in there that I won't get into in detail. And it's really important to make sure, like, not only is that whole team comfortable with the same types of strategies and approaches, but also like that they're not going to be fighting with each other. There aren't going to be sort of egos and hubris going on in the process, or sort of fighting for who's going to get pieces of work and contracted work that could be done by a lawyer or a CPA, right? Those kinds of things. So you want to make sure that team works well together and feels comfortable with each other.
Collaboration is huge, and you're right. Oftentimes, as those deals go together too, so much is changing, and so they have to be responsive and collaborative because it's painful if it's not.
Absolutely. And yeah, I mean, things move fast when you get into a process or a deal environment, and there are, potentially huge amounts of money at stake. So it can be really frustrating when it feels like someone's not responsive or not moving quick enough. And there are 10 people and many different parties like waiting for information, those kinds of things. So, you gotta feel confident in that team, and you don't want to be figuring all that out while you're also trying to go through either a banking process or react to an offer that came to you. That in itself is very time intensive and complex. And so you want that team on the personal tax planning side in place way before you get there.
Sage advice. Let's talk about risk management in putting together these strategies. They're not risk-free. So from a risk management standpoint, did you feel well advised that the people that were putting this together were disclosing all the risks, fully disclosing everything that they knew about the transactions, that you felt well advised? Talk to us about risk management as you went through the process.
Yeah, sure. I mean, there's going to be a spectrum of risk from paying every dime of taxes with nothing in place to, much more aggressive strategies. And of course, you want to feel safe, right? You want to feel like the professionals that have licenses in place are signing their name on the dotted line and aren't doing things that are going to put you like at actual legal risk, of course. And then I think it's really important to make sure that, as I said before, you're looking at the history of these strategies, right? And really understanding, like, as a CPA, if you are comfortable with this, like, have you defended these strategies in the past? Have you been successful? What are the chances that I think my tax bill is going to be X and it ends up being 2X, and also like a lot of professional fees to defend an audit that's potentially not defensible, right? It's really important to understand those things. And I think just like anything else, all you can know is the history, right? And of course, the current statutes and legal environment within which you're employing some of these strategies. But most importantly, what has happened in the past when these things have been put in place for other people. And for me, that was the way I handled risk management. Excuse me, got a little bit of a cold today. So I felt very comfortable with that. I would definitely give kudos to Derek for helping me assemble the right team and really having a lot of that knowledge himself on how these things have been done before and who are the right people to work with on different things. Because the truth is, like, there are a lot of different strategies that you can put in place here, and there will be specialized accountants and specialized lawyers that have more experience with them. And by experience, I don't mean like how to draft contracts or how to file tax returns, but, having actually, in some cases, really defended these things, and also really just having the right individuals at these firms that have worked on those things is really important. It's not like BDO has experience doing this and you get some guy that's been working there for 2 years and has never, actually worked on these things. You want to make sure that the individuals have that background.
I think that's well said. I think the other thing is that the planning team is agnostic about the solutions, that not everything looks like a nail because I have a hammer, that we get the solution set that really is trying to accomplish your goals. And as me doing this, a full-time practitioner of this, nobody's plan, oftentimes I hear clients tell me, well, tell me what you're going to do. You've done it so many times before. I mean, these plans are very different for each individual client, and they could have the exact same facts and assumptions, but slightly different goals, and the solution set is far different. Would you agree? I know you haven't seen lots of plans, but you've been through it for a number of years. What are your comments around that?
Yeah, I know that to be true. And I know it to be true from many people I know that have also had exits. And, if you're saying like liquidity is a huge thing, right? And if you're saying I have another job, another company, whatever, that is going to cover all of my cash flow needs. And I can take a very long-term view of returns, and ultimately estate planning and passing max wealth to my kids is what's most important. That's a lot different than, someone who's in my situation where my number one goal is like, I don't want to have to work again. Not to say that I won't in any capacity, but I was selling my only means of cash flow. And, I needed to produce cash flow as well as wealth for me. And that isn't necessarily typical, right? In my experience, a lot of people that are really successful entrepreneurs that are selling businesses maybe already have other businesses or have plans to start other businesses right away. And they're not looking for cash flow at all. Right. And so there's a huge spectrum of what might achieve the goals for that person. And it is absolutely, it's different because of the business structures. It's different because of different ownership structures. It's different because of the way that the business is actually going to transact and hundreds of other factors. So it is not one size fits all. And in interviewing other wealth managers and financial planners, people are looking to scale their businesses, and they scale their businesses by putting things in boxes at the end of the day. And that's okay, but you need to be aware of that. And if you're going to be, acquiring tens of millions of dollars in an acquisition, that kind of thing is not going to work for you.
Yeah. From a planning perspective.
Absolutely.
Yeah. There's no off the shelf solution from a planning perspective.
Yeah.
Yeah. Very well said, Jimmy. I often tell people that most of our competitors really it's pay the tax and bring them the money that's the majority. Or small fringe things. They don't dig into doing in-depth income tax planning, and we think it really moves the needle especially for business owners selling their business.
It does. Yeah. That's a fact.
Okay, well, let's pivot the conversation from planning to investment management. And just like you said, is that, hey, this was the golden goose that was producing the cash flow, and I was going to get my number two in there to produce that cash flow for me. But somebody came in with such a great offer that, gosh, let's see how I can take that offer and turn that into the cash flow to live my life, so I don't have to go back to work if I don't want to. I can stay with the 5 women in my life and my house and my 2 dogs. And if I don't want to go do something else again, I don't have to. What's been your biggest learning about the investment environment and investments that you've been exposed to in turning this goose into a cash flow machine?
That's a very good question. And I'm, candidly a year and a half into this process. So I'm a complete rookie, and I have learned a ton. And I think there's so much when it comes to investing your wealth. Like, I probably even Derek is learning a ton still in his career about it. I think there's a major psychological aspect to it. Like, you really need to feel comfortable early on, I think, with what's happening with the cash. Very often, I know stories of people that it's actually really common just not to go with anyone managing your wealth, and you get $50 million dropped on you. And because you're making so much effort to succeed with that, you end up losing a huge chunk of it in the first year or two, which is incredibly stressful if you need that money, right, in the long term. And even if you don't need it, just losing $20 million because you decided to be aggressive and not get professional help is devastating. And I've known some people that have been in that situation, and it's really hard. I think number one, like what I've learned is, and what the decision that I made was, like, I'm not going to give myself the ability to make those kinds of mistakes in the short run, at least until I feel much more comfortable, and possibly in the future I will take over some pieces of that. But I've gone to professionals like Centura for the vast majority of managing my wealth, and that has brought a level of comfort that, just from an emotional and mental standpoint, is awesome. I'm not sitting awake at night being like, do I know what I'm doing, and is this what I've done the right approach, right? So just really basic. I think that's a big part of it. The other part is you you need to really get mentally comfortable with a split between long-term impact and short-term impact, and what are your goals and needs. And that's complicated, and you might not even know right away. So, some of those things in my perspective on it has probably changed a bit in the year and a half I've been doing it. And, you may need to be okay with drawing down some cash for plays that are going to return huge returns in a low risk, sort of pretty comfortable way, and in a 10-year period or something like that. But you also want to make sure that you're as active as you can be in getting good returns, right? And not just like riding the stock market, dropping all of your money into equities. Even being a stock picker has a lot of risk to it. So I think you got to understand the split between growth and cash flow and returns in the short run and long term, and really getting that dialed and understanding what I even want from that mix has been a process for me and a real learning experience. And, like every American will tell you, the way you get rich is real estate. And I think that's probably true to some degree, but in a nutshell, it's not that simple, right? And real estate probably over long time horizons is going to generate the best returns and the most growth of wealth for you, but it's very illiquid, and you need a good portfolio and a good strategy that brings you the right liquidity, the right cash flow, the right long-term growth. And you, as the individual or the client, with respect to Derek, you have to kind of evolve that over time and really get to a spot where you know what you want and have the right direction for your financial planners and wealth managers.
Well said. I think the something you said early on there about somebody taking what they took all these years to build, and in the first year to lose 20%, like 20% of the business is gone. I mean, how devastating. You need 25% now to make that up. It was in 2021, you sold at the end of 2021. 2022 happened to be the worst year in bonds ever, and equity, a bottom quartile result. I mean, a pretty tough time to go into markets. You put a lot of money into alternatives, and you started talking a little bit about alternatives. What's your biggest learning? I mean, you came into it knowing, gosh, real estate is a place to probably get good long-term returns and pretty good tax efficient income, but maybe not the yield you really are looking for today. What was your biggest learning in looking at alternatives in this last year and a half?
Yeah, so there are a lot of alternatives out there. And 3-4 years ago, like in a very low interest rate environment, some of these alternatives are a lot less attractive. And obviously it was more attractive to be playing equities that are, markets growing 30-40% in a year. There are, especially today, and I think it'll be holding up for the next few years, at least from an interest rate standpoint. High interest rates from the Fed means really good sort of fixed return vehicles like structured equity, private equity, that's accessible, with huge amounts of cash and very liquid in a lot of cases. There are a lot of really good ways to get high returns that are very low risk and very well protected right now. And you don't need to be going and I like hard money on the side with, some of my cash, but you can get returns that are pretty similar to hard money with almost the same risk profile and just very liquid, in and out, really easy deals to do. So yeah, we've found a lot of great opportunities to get really good growth and cash flow, sometimes not in the most tax advantaged ways, but you have the long-term growth side of the portfolio for those things. And yeah, I mean, my deal closed on the last day of 2021, and I think a lot of people, probably myself included, would have been pretty aggressive about getting that money to work quickly in more speculative ways, whether that's equity or other things. And Derek and team were pretty adamant with me, we don't want to get this into anything that's risky right now. And I mean, I could have taken a huge hit doing what I may have done myself. And instead, we got through last year with positive growth, which, very few people, I think, that were fully allocated in environments prior to that year. Very few people did that. So for me, like a lot, especially in today's environment, a lot of these, alternatives, call them private credit, structured credit, private equity. I'm looking more at hedge funds and things like that right now. They're really interesting in today's environment. Maybe 5 years from now, they won't be so much. But when it does make sense to be a little bit more risk off for people that don't need to be getting 20% returns, it's a really comfy to be getting 10, 11, 12% pretty much guaranteed. And for now, like that's where a lot of my money is and probably will be for a while.
Thank you for sharing all of that, Jimmy. We are winding short here on time. Why don't you leave the listening audience with your final thought for today?
Yeah, well, I mean, if you're in a situation as I am, congratulations. And I think the best thing I can say to you is like, don't screw it up, right? Don't leave it to yourself. Go find the right people. Use your judgment and your experience to do that. Make sure that you have a team in place that you really trust. Really scrutinize them on their history and what they've done. Talk to their clients. Get that team in place because, I think if you do that, the worst that can happen is, you lose some money and afterwards you're thinking maybe I picked the wrong team or maybe this is just the environment. But if you go your own route and you don't have that right team in place, you don't want to have the regrets of like, I just didn't do the work I needed to do up front. Put in that time. It's easy to think I don't have the time for this. I know how it is. Like you're probably already working 12 hours a day. This is probably from a time invested and money returned standpoint, the best you can do. I mean, something that can't be ignored and something that you can't do early enough.
Jimmy, thank you so much for coming in, sharing your perspectives today. I think it's very sage advice. People spend so much time building these businesses, and it doesn't take that much time to really plan a very, very successful exit of that business. And in my experience, high 90% of people don't spend the time to do that planning. And it's because it's planning, right? It's easy to push it off, and then all of a sudden something happens. So
absolutely. Human nature.
Well, thank you so much for your trust, your confidence, spending the time today with all of us. The last thank you goes to you, the listening audience. Thank you for listening to the Live Life Liberated podcast. And if you'd like to contact us here at Centura Wealth, it's at www.centurawealth.com, CENTURA wealth.com. Thank you. Make today a great day. Speak to you soon. Bye now.
Thank you for listening to the Live Life Liberated podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Centura Wealth Advisory. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Centura Wealth Advisory. Centura is an SEC registered investment advisor with its principal place of business in San Diego, California. Centura and its representatives are in compliance with the current registration and notice filing requirements imposed on SEC registered investment advisors, in which Centura maintains clients. Centura may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Past performance is no guarantee of future results. Tax relief varies based on client circumstances, and all clients do not achieve the same results.